Hello everyone and welcome to this morning's Forex webinar for the London session. As always, thank you for your patience. It wasn't a technical issue, it was just for some reason my GoToWebinar doesn't always load when we sort of start to prep for these sessions. So I had to shut everything down and start again. Anyway, that's all working fine now. As I said, thank you for waiting, and it's great to have you join us today on a somewhat sort of mizzling rainy day down here in Hampshire. But before we start, as always, please may I draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a risky business, so please don't ever think of using money that you cannot afford to lose. And very quickly, just in case I had a quick look down the list. I know we've got some of our Forex students. I know we've got some of our users for our quantum indicators, but I can also see we've got some new people here. And for those of you who maybe it is your first time visit to one of these sessions, we will be looking at the charts, and the we is myself, Anna, and my husband David, who's sitting behind me. We're looking at the charts through the prism of volume price analysis. That's the kind of technical analysis of the chart, and it looks at price action and volume to tell us basically whether the price moves that we are seeing are genuine or not. And the best way to see it is actually on the charts. But we also look at this market. Obviously, we take account of the fundamental news, but we also take it one step further, and that is we also look at related markets for sentiment, because as many of you will know, market sentiment is reflected not just in risky assets going up and down, such as equities and indices, but also in movements of a certain currency. So whether the yen is being bought or sold, is the Aussie being bought or sold? It's that sort of information that really just will give you a huge advantage, because you're then beginning to understand this market and its complexities. It's not a complicated market, but it has its complexities. It also has divergences that we are seeing in the markets at the moment. So what we always try and do is basically track what is going on in terms of money flow. Where is the money flowing? Is it into the Swiss franc, a safe haven currency? Is it into the US dollar, also a safe haven currency? It's the currency of first reserve. And as I mentioned earlier, the yen, which can act as both a safe haven currency and a risk currency. And I also mentioned the Aussie, and the Aussie is very important because it is closely aligned to whatever information and news comes out of China. And we've had the first of I say this month's, July's PMI releases. They always come out in China first. It's come out, it's not the 1st of July, that's tomorrow. It came in slightly better than expected, over the 50 mark, which is the inflection point. Chinese data, everyone knows, it has to be taken with a little pinch of salt, but be that as it may, it's how the market reacts to that news, and market seems to have taken it quite well. Certainly the Aussie has, because when we look at the currency strength indicator, which is this indicator over here, we will see that the Aussie has actually been bought overnight. These indicators we developed primarily to help us track what we call the flows in and out of this market, not just on an individual currency basis, but in terms of pairs. So because you can have a flow into a strong flow into, say, the British pound or the euro, and you think, oh, that's a fantastic move, but is that reflected across all the pairs? Is that flow consistent across the pairs? And which is why we developed what we call the currency matrix and the currency array. And we also have a fourth indicator here called the currency heat map, which actually looks at the tracking those flows across multiple time frames. But as I said, the best way to see all this is to see it in action. Now, we are also coming up to the London session, always a great time for lots of traps to be set for the unwary. And in fact, I have a cable up at the moment. I've been tracking a move that has been in cable, in fact, since just before the start of the European session. If we look here at 6 o'clock, we can see here cable pretty much in congestion. This is the 5-minute chart. As you would expect, it's not a pair that is heavily traded in the Asia session. this congestion phase here, oscillating around what we call the volume point of control. We look at volume in two ways in VPA. We look at volume down here in terms of the activity, but we also have another way of looking at volume, which is volume over time. So it's transacted volume, so it's price, volume and time. And we can see here very strong congestion phase. We know it's strong because we have a strong area of resistance and a strong support area. And it's just basically moving sideways, waiting for the start of the new sessions. And we've had Europe and we're now coming up to London. Then we had the break. We had the break on a volatility candle down through, not a lot of volume, but volume kind of picked up as the move continued lower. We had another volatility candle triggered here. We had a retreat into the spread of the candle, reasonable amount of volume, but not sufficient to push it higher, and then carry and tracking lower. And this move was also tracked on the currency strength indicator and the matrix, and also on the array. As I said, now we've reached what we call volume support under here at 120, roughly 122.65. Now the reason I'm highlighting this cable is because I'm actually going to be focused on cable for the rest of this month, and the reason is because Brexit is now back on the table, and I'm going to tell you later on some factors that perhaps will help you assess whether a currency is going to perhaps have a period of volatility. And by volatility, I just don't mean the unexpected bursts that can hit the market, but volatility in terms of whether the currency and currency pair is going to deliver a reasonable range, if you like, a reasonable number of pips in the coming days, weeks, and perhaps even months. And we'll look at investing.com, and we'll look at the implied volatility for the British pound, and we'll also look at some volatility data that is available on investing.com. Now, what's interesting about the 5-minute chart, those of you would have noticed, is that the VPOC, the volume point of control, has now dropped because we had this we had the move lower, then it went into a congestion phase ahead of London, which often happens, similarly before a major piece of fundamental data. This indicator is dynamic, and it dynamically moved from here to here. So we have now another congestion phase, and now we're waiting. So is this going to act as perhaps support for a reversal, or is the move going to carry on lower? We'll also look at the key levels for this particular pair, and on a weekly level, these are the weekly levels for cable. I've actually kept the session separators here, because what I want to see, because I'm going to really be focused on the British pound, but probably on cable particularly, but I'll be looking at maybe one or two of the cross pairs. Is I can see here, this is yesterday's low. It's just below the S3. These levels here that have been calculated by our Camarilla indicator, these are in play for the remainder of the week. So I have some, if you like, some price objectives for this particular pair. It's quite interesting. With the pairs we can see here, they tend to be around the 0s and the 5s. You'll find support and resistance levels, Camarilla levels, they all tend to be around the 0s and 5s. It's just a feature of all markets actually, but particularly so of the forex market. And I've got the 10-minute version of the chart. The levels calculated on this chart are calculated each day. Every 24 hours, you will have a fresh set of levels. So the levels, volume, price action, fundamental news, Brexit, which is political news, they're all going to combine to potentially deliver some decent moves in the British pound. And as I said, now I'm waiting for London. Let's see what happens on whether we get a reversal. What often happens is you have a nice move just before the London Open, a bit of congestion, and then as London comes up, you get what looks like to be a reversal. It's often a trap move. Traders wait for London and they, oh great, you know, we've had this nice move. Is it going to go higher? And suddenly it may go higher, but suddenly it stops and then carries on in the original direction of the primary trend. So we'll see if the classic London trap is actually going to happen or not.